We are on.
Greetings, everyone. Welcome to the December Finance Committee meeting of the Sonoma County Library, and we will open it to roll call. All right. Commissioner Cahill. are you
Here. I'm here.
Commissioner Doyle.
Here.
All right, joining us remotely and under just cause. And I need to ask you, Commissioner Doyle, is there anyone else in the room over 18 with you?
No,
Thank you. All right, I hope you feel better.
thank you.
Oops. Commissioner Elkind
Here.
and Commissioner Poles. He's not with us today. Okay. All righty. Does anyone have any announcements? Seeing or hearing none, we'll move to public appearances. I don't see any members of the public here. Is there anyone on Zoom?
Commissioner Engbarth is on Zoom as an observer. There are no members of the public on Zoom.
No other members of the
No other
public?
members of the public.
Thank you. All right, let's move right into our discussion. Our top number 4.1 item is the draft audit for the fiscal year ending June 30th, 2025. And we are so glad to meet our new audit team. Can we see the new audit team person?
Yeah. So good afternoon. I'm Myrna Lopez, Chief Financial Officer, and we are delighted to have the draft independent financial audit as of June 30th, 2025. And we do have a new firm this year who conducted this audit, and would like to have some introductions. I see that Mr. Harshwal is here, and he is a partner with Harshwal and Company. And I don't know if you have any other members of your team here, if you'd like to introduce them, but I wanted to thank you for working with us and helping us meet our obligations for our annual report. I also want to give special thanks to the county team under the auditor, controller, treasurer, tax collector, and they work with us through the year, and in particular, for this important item. And also to the library budget and accounting team, also including our payroll person, that are responsive and ensuring that the work gets done and is responsive to the auditors during this time. It is a pretty intense time, meeting tight deadlines, but what really matters is the work that goes on throughout the year to make sure that we are meeting all of our obligations throughout, and having an approach of excellence. So with that, Mr. Harshwal, would you like to introduce yourself and anyone from your team that may be on here today?
Absolutely. Thank you. Good afternoon, everybody. My name is Adi Harshwal. I'm a partner at Harshwal and Company. We have an office in San Diego, one in Bay Area, and one in Albuquerque, New Mexico. Another audit lead, her name is Garima Jha. She's going to be joining us in maybe 5-10 minutes, and she would be doing the majority of the presentation. I do want to mention that we had perfect support from the administration and the finance team. They were available and answered all our questions, and no exceptions were noted in the process of the audit. We have no exceptions or issues during the whole process of the audit. Harshwal and Company primarily focuses on audits. We are doing close to 5 other libraries. We are doing close to 70 special districts, and we do numerous other state and local entities, housing authorities, cities and towns. We do few counties as well. And we also do audits for Native American tribes and Native American entities. So that's a little bit of background on us. If you don't mind, we can jump into the audit report and go through that.
Yeah, please do.
Okay, perfect. So before we begin, I like to talk about the findings itself, the meat of the matter. Were there any exceptions? Were there any findings? What is the opinion? So we have an unmodified opinion, clean audit report, no findings or exceptions reported.
Mr. Harshwal, do you have a PowerPoint that you would like to share?
Certainly. Let me share my screen. Okay, perfect. Is my screen visible?
Yes.
Can you do the, yeah, that's the correct version. Thank you.
Perfect. So to begin with, we do like to talk about the management's responsibility during the audit process. So the financial statements are stated in accordance to GAAP, and they are free from any material misstatement, whether due to error or fraud. The internal controls, accounting policies, accounting systems, significant estimates, and management representation letter. So this basically is, of course, the information is covered in the audit report. The PowerPoint just provides a summary and a venue to present the financial statements through graphs and be able to answer your questions. Here we talk about the audit procedure and the process that we use to conduct the audit. The entire audit process is done under the federal audit guidelines, and the entire process from start to end goes through a very rigorous process, which doesn't have a lot of customization. So just to give you a brief overview, we do test the transactions and compare them with the documentation that support those transactions. We use analytical tools. We use technology to look at trends analysis, to look for variances. Another important audit function is the third-party confirmation. So these confirmations we get from the bank, any lenders, and we also get the attorney confirmation. We during this process we look at the management's estimation and look for the reasonableness that goes through the audit testing. The final portion of the audit process is to review subsequent events and contingencies beyond the audit year, just to see if there were any events or activities that would affect the financials. This is the slide that I did cover in the beginning. The opinion is unmodified regarding the internal controls. We didn't find any material weaknesses or any significant deficiencies. So in this slide, we talk about This is a representation of the financials presented in graph form, and it is a comparison between 24 fiscal year to 25 fiscal year. So as you can see, the trends are positive. The assets are going up. The liabilities are manageable in similar trend to previous year. No significant deviation. I'm sorry I didn't mention it, but if you, during the presentation, have any questions, please feel free to interrupt me. I'm happy to go over any questions. Oh, another quick feedback from my end regarding the audit report itself. The notes to the financials are a key portion of the audit report, which has a lot of key information regarding the financials, goes over a lot of details about the numbers, where they come from. So if you refer to your audit report, where we talk about notes to the financials, that's a key location to get a good background of what's going on in a fiscal year in the audit report. In this slide, we are just representing the assets, current and non-current assets. We are representing the liabilities. The long-term liabilities are relatively stable. The current liabilities have gone up a little compared to last year, but the revenue and asset has also gone up. Here we are talking about the net position, restricted and unrestricted funds. And as I mentioned, getting additional details about these numbers, always a good idea to refer them to the notes. This, again, government-wide financials regarding statement of activities. We are comparing revenues and expenses here. As you can see in this, we don't have a lot of major changes. The changes are in the positive, which is good. The comparison helps get a frame of reference. This is the revenue portion. As I mentioned in the earlier slide, the revenue has gone up a little. This slide goes over the expenses, statement of activities for expenses. Again, very stable, very similar to previous years. Nothing that moves or deviates too much. Personnel is stable. The program expenses, material. This portion covers required communication from the auditors for the board. So as I mentioned previously, the audit was conducted in accordance to the auditing standards generally accepted in United States. We follow the guidelines that are issued. The audit does not relieve the management of the library of their responsibilities. It goes through few of the areas to be highlighted. The audit provides a reasonable but not absolute assurance that financial statements are free of material misstatements. Audit is not designed to provide assurance on internal control or to identify deficiencies in internal controls. Audit was conducted as planned and previously communicated during the audit entrance conference. No significant unusual transactions were identified. No other services were provided by our team. We believe we are and have been independent in all respects. And as I mentioned in the beginning, we encountered no difficulties and we received complete support from the administration. Oh, fun part. Any questions?
Thank you for that. I have a number of questions in the narrative. What we received in our packet as opposed to your slides. And do others also have comments on what we received in our packets?
No, I'm just glad that we got another clean opinion.
Yes, big picture is we got the clean opinion. We're happy about that. But rather than go like one by one, first I wanted to see if any other commissioners wanted to ask their questions.
I have no questions about the presentation you just made, and yeah, I was trying to speak off mic to Barbara. Yeah, okay. So I'd say go ahead.
I didn't have any questions about the presentation. So you mentioned another one of your staff that was going to present more information, or?
Oh, so her name is Garima. She was the lead auditor in charge. She was stuck in another meeting, but the audit report, the draft audit report stays. There's no additional information that she would be providing, but she would be able to provide a lot of the context of any specific question. So she would be joining us shortly, but I'm happy to address any questions or concerns regarding the audit report.
Any questions or concerns about the presentation or where?
The audit report.
The audit report also, okay. Okay, well, I'd like to go ahead and ask you a few questions on the audit report then. Let's see. Oh, let's get on, wait on that one. On page 27 of in our packet, it talks about defining the financial reporting entity. And I just would suggest a couple of changes to that. It says it's a joint powers agreement, which it is, or agency established by the County of Sonoma and the cities in 1975 to provide library services on an equitable basis throughout the county. And on August 1st, 2014, the joint powers agreement of the library was amended. The amendment created a separate government entity. I'm wondering about an independent public agency. And I don't know the technical terms, but that's more how I think about it, as a separate government entity. I wanted maybe some advice about that. And then I think the word adding should be in there, adding additional representation for jurisdictions. Adding additional jurisdictional representation. It's more than just representatives were added. because, you know, it's not just random people throughout the county, but they were added, you know, to be appointed by the individual jurisdiction. So anyway, I just wanted to add a little clarification to that paragraph. I don't know, do we wait for the other person?
No, certainly. I'm taking notes and we are happy
Okay.
to update this narrative.
Okay.
If you don't mind, can I also get the previous, I got the adding additional jurisdictional representation. What was the point before that?
Well, I guess it'd be the last sentence. This amendment created a separate government entity, and I was going to suggest an independent public agency, but I don't want to get the words wrong, and I don't know comments on that from our director or,
Well, I think that this would be something we would have our legal counsel
Yeah.
review because that is a more appropriate person to ask.
yeah. So maybe just make a note that we're going to check on the proper definition of what we are. The second phrase in that is with, no, not with, but adding, just separate government entity, comma, adding additional jurisdictional representation on the
Certainly.
governing.
Absolutely. So we will coordinate with Marina, and once she confirms the attorney agrees with the update of the language, we can certainly update the language here.
On page 25, at the bottom, it talks about investment in the county treasurer pool. And the page before, it says everything's in the pool except for petty cash, payroll clearing account, a cost recovery account, and restricted cash balances. So the language doesn't exactly match on page 25. We see what the pool is, and then we see the non-pool cash investments. Cash in hand, is that the same as petty cash?
Marina, you want to address that one regarding the cash in hand?
Can you make this bigger? Where are you referring to, Commissioner
Well, I'm
McKenzie?
starting with 25 and then jumping back for comparison to 24, or in our packet, page 34 and jumping back to 33. I don't know. I guess what we're seeing on the screen is page 34, so they're at
Okay,
the bottom.
page 34 at the bottom. You don't see the cash in hand.
So in the investment section, non-pooled cash and investments, it talks about cash in hand. Her question is cash in hand different from petty cash?
No, I would say the cash in hand it says 940,000 is the total of what's in the
Bank
outside
account.
of the pooled cash. So it does include four accounts, the ones that have been listed. It's petty cash. We have our payroll account, and where we also where we collect the revenues from our branches when they come in, those are collected weekly.
Well, if you look at page 33 under note 3, you can see it says related to flexible spending account and health reimbursement account. And you can see those listed, flexible savings account and health reimbursement account. You can see them listed clearly. The other ones that are listed say unrestricted and cash in hand. on the page before, it calls them petty cash, payroll clearing account, and cost recovery clearing account. So I just thought they should be more, they should match those those categories, the language that we're using.
Okay.
I mean, probably a couple of things are combined to get that 27,000.
That would be all cash. 27,000 is what we normally hold in cash.
So is that the payroll clearing
I'm sorry,
account?
not 27,000, about million. I don't have, I'm trying to follow. So Adi, if you could have Garima join us as your team prepared this report, I think it would be
Okay,
helpful.
me?
No, absolutely, Mirna. So what I will do is the point that the board member has raised, we will what do you call, match the exact list of details we are talking about in note number 3. So I think what she's saying is petty cash, payroll clearing account, the cost recovery clearing account. So this should match. So we will review note number 3 and provide updated language there. And as she requested regarding the cash in hand, we can certainly provide additional details on the breakdown. As you mentioned, it adds up to the 3 accounts and the balances in the bank account. So we can certainly provide additional details on that.
Yeah, I have a question. The highlighted figure for cash in hand is $940, not 940,000
Or a million.
or a million or whatever. So it looks like we may have a decimal point problem there, unless it really is just $940.
That's why I think
Yeah.
it's petty cash.
It is, it's just for.
So
It's
it's
petty
petty
cash.
cash.
Yeah, that's what I said. It looks like petty cash. But, and then it looks to me like the next line is a combination of these other 2 things, payroll clearing account and cost recovery account. But it just, some of the lines, the last 2 lines are exact descriptions that are in the page before. The other ones are not the same, so it doesn't parallel exactly.
We'll provide a drill down of what is included in this.
I think what Commissioner McKenzie is requesting that we use consistent language so that we know that these items match the items on the previous page.
Yeah. And not be combined. Okay. So sorry to belabor that point, but it was difficult. So now I'm on page 40 of our report. And it's a question about the discount rate, which is, as we know, the expected interest rate. So of the cash that's in there, as you can see above, all the expected rates of return, none of the investment choices have anywhere near that expected rate of return. So why is that the discount rate?
This is what is noted in our OPEB reports, and we invest our OPEB. Our trust is with CALPERS, and that is they set the discount rate.
Doesn't make much sense given what the expected rates of return are, as spelled out here.
Well, the discount rate is what is expected, and then you have your actual rates of return.
Yeah, but they're both expected. The up above there, the asset class, it has the expected rate of return, and the discount rate is also the expected rate of return. And they just don't understand why they aren't similar, more similar. Anyway, that's just, maybe nobody can answer that question right now, but I just wanted to make note of that.
I feel that's out of the scope of the audit. They're just reporting the information that OPEB is reporting to us. Similarly, they're reporting the information that CALPERS is reporting to us. CALPERS and
Sure.
OPEB use two different discount rates. We could question that, but I don't think it's in the
Okay.
scope of the audit
Okay.
to
You're right.
cover that.
I had other questions about page 31 and the language and committed and assigned and relative to our special fund reports, but I'll ask those later when we're talking about those reports. So those were my questions. Do any other commissioners have any other questions?
I had one question.
Commissioner Elkine.
First of all, thanks for doing this in a timely manner. I realize that when you do it for the first time for a new client, there's additional work involved. Really appreciate you and your team doing that. My question had to do with the change in accounting standards. I think this was reported as note 13, and I realize that you don't dictate those changes. I was just wondering if you could kind of in layman's language talk to us about what that change was and what the purpose behind it is and what we would expect, if anything, to see differently in our financial reports going forward.
So, no, thank you for those words. You are absolutely right. During the first year, we do spend additional time and effort learning about the entity, learning about the systems and processes, and just creating a working balance and a working relationship with the team. So yeah, we definitely appreciate you mentioning doing it on time. We do spend extra efforts during the first year to make sure the disruptions are minimum. To come back to your specific question regarding note number 13, we certainly don't control these updates. The only good thing about these updates are that they give us plenty of time to prepare and educate ourselves and our clients. So in this one, it is specifically talking about the compensated absence, GASB 101 update. So this was announced years ago, and it was announced that during the fiscal year 25, it would become active. That's when it will go into effect. So here we are basically representing what that change, what that effect has on our financials. So this is basically because of GASB 101, the compensated absences are calculated and presented this way. Previously, compensated absences were reported together in that total figure. And the GASB 101 wants you to present them separately.
Can I clarify something? I want to make sure I understand what you're saying. Compensated absences, this is referring to employee use of vacation, sick time, and other forms of time off that are paid for.
You are absolutely right. So it is referring to earned employee time off like vacation, sick leave, or any other compensation that would be related to their termination or representing any financial liabilities for the entity. So GASB 101 wants us to present it separately so that it can be clearly identified.
Also, just to clarify, so this number represents unused compensated time off. So if everybody were to take all of their time off, we would be paying an additional $1.1 million?
That is correct.
Okay.
And just to add to that point, Our team pays close attention to new GASB guidelines. We go through our CPE training internally. We have an external CPA who provides training for our team. And so any new guidelines that come up, we will educate the administration and the team and make sure they are ready and keeping pace with new guidelines that are coming in. So yes, we will definitely make sure the library's team is up to date and knows what is coming.
Any other questions from anyone?
Great.
Yes.
Not a question, but just a comment, if I might. I don't know how much Myrna and our finance team have shared with you about the composition of the commission as a whole, but we don't have, I would say, a lot of in-depth financial knowledge, and so I assume you or somebody from your team will be presenting to the full commission at the January meeting. Is that right?
No, we can certainly be available for any meeting that you request us. So
Okay. I should not assume that then. Okay.
Yes, it has been requested of this team to, it was part of the RFP. It's been ongoing discussions, and Harshwal and a company should have it on their calendar to present on the 7th.
And yes, and we will definitely be available, and we will accommodate any requests. So if you want us, we can talk about the financial statements, what they mean, just go a little bit slower, go into more detail. We are more than happy to do that.
Well, I was thinking more the other direction. It may be helpful for the commission for you to clarify the focus of what's included in the audit versus those things like the CALPERS and OPEB information, which you have to include here, but which you're not really responsible for auditing. I'm concerned we could get sidetracked in stuff that is not really the focus of the work, which is verifying the accuracy of our financial reporting. That's all.
No, absolutely. I completely understand that. And if there are any questions that are beyond our scope, we can certainly politely mention that we would not be able to address that portion. We are simply reporting and presenting the information that we got. So you are absolutely right. There is quite a lot of portion in the audit report where auditors are simply presenting and reporting the information, not necessarily producing that work.
Sure. And what happens is information from CalPERS and information from the OPEB documents and statements and valuations feed into our financials. And so they're required to provide some notes about them. Harshwal has provided very detailed notes as compared to previous years, but those separate reports regarding OPEB and regarding CalPERS have been presented to this committee. And those are the ones that Harshwal or any auditor, Alexa, dismissed. Sorry about that. Would be using to prepare our financials and report those figures in these financials, and then audit the financial statements.
Great, thank you.
I'd like to add, yes, Lisa.
Oh, I just wanted to let you know that some members of the public have joined the meeting. So if you can ask for public comment on this item and subsequent items as we move forward.
I'd just like to add, Paul, we have this theme going in terms of the presentation to the commission. I personally didn't find that those bar graphs were very illustrative of kind of the big picture, and I would appreciate more narrative of that kind of big picture of, you know, how we're looking, which is obviously good. You know, the conclusions are very positive, So, so just a little more narrative like that, I think to the commission would be helpful. And let me ask if there's a member of the public who is watching now on Zoom who would like to make a comment about the audit. What are you seeing, Lisa?
No hands are raised.
No hands are raised. All right. But thank you very much. And to our CFO's point about the detailed notes, I found reading this it was very clear, and there was a lot more information, very well presented in a very thorough and factual way that I don't believe has ever been in our audit reports before. I found it really nice and clear and clean, and every question almost that popped up in my head, the answer was already there. And so I really appreciate just the clarity and the summarizing of, a lot of things, our policies on things, and our, the way our health insurance is paid for retirees. I mean, there were a lot of details in there that I thought were very helpful. So I appreciate that. And following up on Commissioner Alkine's comment about appreciating the good job that your team did, I second that. I think we all do. And appreciate your doing a great job for Sonoma County Library. So thank you. We look forward to seeing you or one member of your team in January at the full commission meeting.
Thank you. Thank you so much. I just want to do a quick recap. We will look at note number 1, note number 3, look at page number 31, and regarding the presentation on January 7th, we will update the graphs, give more details on the big picture, and provide a little bit more context and more details about the overall picture of the finances. Last comment regarding your feedback regarding the notes. Yes, the oversight agencies have been trying for years now to figure this out. The audit report should be self-contained and should be able to answer any of your questions while you're reading it. So it should present the financials and the numbers in a very standardized form. The notes to the financials should be able to answer and predict all those questions and respond to them. It should be a self-contained document where if you pick it up and read it, you should have an overall picture of how an organization is doing. So we certainly thank you for those comments, and that has been an effort for the entire audit community to produce a report which is self-contained.
Right. Well, thank you, and we'll see you next month.
Absolutely. Thank you.
Next year. Next month
Next
and
year.
next year.
Thank you. Happy
Thank you.
holidays. Happy New
Yeah.
Year.
And same to you and your team.
Will do.
Bye-bye.
Thank you.
All right. We are now at 4.2, which is hearing about our monthly financial report for November. And CFO Lopez, would you like to talk to us about that?
Yes. So we are presenting here and looking at the monthly report ending November 30th, 2025. And our combined revenues are at 5.2 million approximately, or 11.4% of the budgeted revenue. November does mark 42% of the fiscal year that has been elapsed, so that's 5 months. And the month of December, this is November, obviously, but the month of December is the one where property taxes are recorded. They come in December and April. December, not all of the property tax has been recorded for this month as of today. So I don't have much to report on that, but I am expecting property tax to come in on target. Sales tax Our revenue has been almost $4 million through November. That does represent 3 months of sales tax, which is very close to, 25% of what of the budgeted revenue, and that's good news through November. And so I do remain conservative on where we will end this year. I think just with 3 months of sales tax revenue, we should be meeting our revenue target as well for the year. Under other revenue, we have $1 million combined. This is driven primarily by the Building Forward grant that we receive for the History and Genealogy branch. And moving on to expenditures, we have almost 21.5% or 44% of expenditures met. Salaries and benefits are over $13 million or 43% of the budget. And primarily we're still experiencing that lump sum that is paid in July. And we do that to gain some savings as opposed to paying monthly. And that savings was almost $55,000 for this year. These salary and benefit expenditures will be evaluated closely and reported on in the mid-year report. And if any adjustments need to be made, given that the MOU came in with COLAs, that will be reflected in the mid-year report. Other highlights are, I wanted to share with you that under capital expenditures, we still see some high numbers coming in due to the modernization projects. The last time that capital projects or the status of those were reported in detail was in October. And since then, there have been a couple of invoices that have come in. So they've been reflected in November. And my hope is that for the second quarter update for this fiscal year, that we will be able to have closed out those projects. Petaluma we were sure to have resolved. The others where I do know we have some pending items is the Cloverdale project. So we have cash balances of property tax of $9.3 million, sales tax $12.6 million. That's unrestricted and restricted cash of $5.5 million. $3.5 million of that is bequests. Under fund balance, I wanted to give you some history on where we were with fund balance, given there was quite a bit of discussion on it, and given that it's tied quite a bit to capital projects that have been discussed. So I have the history of summary of what happened in November in the Finance Committee. And since then, also, the commission has approved not additional funds, but the release of additional funds for the Rincon Valley project. And our fund balance statements reflect that because they were shown as a placeholder for Rincon Valley. And so what you have right now in fund balance as of June 30th is property tax at $8.9 million and sales tax at $913,000. So with that summarizes the monthly report.
Thank you. I guess I should ask any members of the public have any comments about this report before we discuss? No hands up?
No hands up.
All right, thank you. I have a reference back to our audit report, and to what you were just talking about, Myrna, about the history of the fund balance discussion. So my understanding was from the last meeting that we were taking out the word commitment and using pending, or in particular, the Santa Rosa HVAC thing. So anyway, when I look at the reports, I see in the center section, we're just looking at the special fund activity for, I don't know, either one of them, but I'm looking at property tax right now. And it says, just in that center section, adjustments to reserves, and it says under discussion, and we did use that terminology. But I see down there then in the final chunk, the shaded area down there, I see that we're still using that language, even though there aren't any amounts in there.
Oh, okay.
But what kind of concerned me was just reading this audit, and are we using those terms consistently? They, in the audit, so, you know, committed is actual formal after we have taken formal action on the commission. And, you know, we haven't even talked about it at the commission. So, you know, I don't know. Yes,
Yeah,
Andy.
I thought we had agreed that we were gonna change the language in that lower section.
Right.
And it doesn't seem to reflect that.
Right, that's what I was saying.
I agree.
That's correct. I was remiss in updating the language in the gray, but yeah, I'll make sure that that's updated.
So just to clarify, Myrna, I think it's the word committed that's giving me
Right.
a little angst here. I like the pending part, but if you could just make it consistent with above, under discussion or pending, and not
Right.
use the word committed, that would be really helpful. Thank you.
Yes. Thank you.
Okay, any other comments from commissioners or? Okay. Thank you for that report. I think we're all on the same page about that. Appreciate it, Myrna. Moving on to 4.3 unassigned fund balance planning, talking about additional payments to pay down our liability on CalPERS employee pension plan. So that's item 4.3. And did you want to walk us through that, please?
Sure. So let's see if I have it. Yes. So in October 20th, the Finance Committee reviewed several scenarios and identified one option that they wanted to recommend the library director to review. So under Finance Committee direction, I'm sorry, it says February 20th. I don't know. It should say October 20th meeting. The library director was not present, so the committee asked that the library director come back to the Finance Committee with review of the option the committee selected, and in the process of doing so, the library director and I reviewed that option of paying $2.3 million annually. That we felt that to sustain a $2.3 million payment annually was going to be a challenge going forward, and we thought that there could be a more modest alternative. In looking at this more closely, is that with the $2.3 million scenarios, the ADP, the goal was to match $2.3 million annually. And so the ADP would vary so that we were making our minimum payment, and then the ADP would be a plug to meet the $2.3 million goal. In that scenario, towards the end of the payment plan, years 10, 11, there is a higher annual ADP. But if you flip it around and make a higher payment at the beginning of the payment plan, there is a greater savings gained. Or on the flip side, you pay less interest by making greater payments earlier on in the plan. So that was one advantage of the alternative. The other advantage is that the annual payments are more consistent. So those are the two benefits that the library director and I looked at in terms of we are recommending an alternative plan. And that is shown in that chart where in total we would be making $6.5 million in ADPs over 14 years. And the first 3 years, it would be the $600,000, and the remaining years would be $400,000, with the last payment being $325,000. And this was generated with the CALPERS model that they provide members to use, and I've used them with all of these scenarios that I've presented. So that is it in a nutshell. So we are asking, one, if you have any questions on this, and asking for further direction in this. I think also in considering this, at this time, it is proposed to make those ADP payments from the operating revenue. And if there were, but with the flexibility of using fund balance as needed. So that is the presentation for how to move forward with a plan to pay down our unfunded accrued liability.
Well, thank you. It's a nicely laid out and understandable, and a very good premise that you're starting with. I just had a couple of quick questions myself. Are the proposed ADPs, are those fixed numbers?
Yes, it would be fixed. Well, it would be
That's
fixed in terms of year 1 through 3 would be 600,000, 4 through 13 would be 400,000, and then the last one would be the remaining 425.
Okay.
325,000.
Because these are still, we're working with estimates what our bill is going to be, the pay-as-you-go bill. And so, what we're expecting may not be exactly what they bill us, right? I mean, these are.
Yes, this is their best. It's a model. It's a financial model. They take into account many moving parts.
Right.
Mm-hmm.
But we're not going to adjust our payments are going to be fixed. Our ADP is going to be fixed regardless of whether they adjust up and down.
I would recommend that. Yes.
Yeah, I'd like to have a fixed schedule. And let's see. And the goal you're saying is the same as we started off with, which is being paid off in 15 years.
Yes.
Basically 100% 15 years. So that's good that the goal doesn't change. Okay. Other commissioners' questions?
I don't have a question. I think it's clear. I think it's a great idea. You get a gold star, another gold star.
They're adding up. Andy.
Thank you.
Myrna, I appreciate you laying this out. I'm also strongly in support of it. I'd like to move ahead with it as quickly as we can. The question that I have is not about the ADP, it's about what shows up in the mid-year column. And let me express my concern as best I can, and then you can tell me if I understand or misunderstand. I believe that this column represents the amount that CALPERS is going to tell us we need to put in every year based on what our current payroll is, but also based on their calculation to kind of try to bring us up to fully funded at some point in the distant future. My concern is, I'll just create a hypothetical scenario. Let's suppose that for 25-26, our mid-year payment is, 1.699 as indicated, and we make the $600,000 payment. My concern is that the next year, CalPERS will recalculate the mid-year payment and say, oh, you don't need to pay 1.891. You only need to pay some lower amount because they're considering the $600,000 that we've paid, and they're slowing down the rate at which we're paying off the accrued liability. Is that going to happen, or is this mid-year number, in fact, not going to be impacted by the additional payments we make?
The mid-year payment under proposed already takes into consideration the ADP. So the mid-year is being recalculated and incorporating our ADP to then recalculate the mid-year. So the mid-year is the new mid-year given the additional payment we're making.
So does that mean that, in fact, and I won't be here, but that for the 26-27 fiscal year, we'll make an ADP of 600,000 and we'll make a mid-year payment of 1.891 million?
That is what we have today. That's what it would be recalculated. Yes. However, I do want to, this is using the latest report that came out with it represents June 30th, 2024. And so it doesn't include the gains and losses that we realized in fiscal year 2025, which were to the good for us. So we might even see something better than this plan in terms of paying it down faster. But we don't know, beyond that, we don't know exactly what's going to happen. So this is the best we can do based on the latest report we've received. And I can update this, every year in terms of what our mid-year payment would be. I can
just
do
want
that.
to be sure that I just want to be sure. I mean, the proposed ADP column, that's really clear. And I mean, I think we all can get behind that. My concern is just that we continue to make the mid-year payments that we need to keep us on track with this trajectory.
Mm-hmm.
And as a comment, I would go back to take a look in the audit report at two different sections, one on pages 52 to 54. So I don't know, Lisa, if you can bring us back to that, please. It's 52 and 54 in the packet.
Mm-hmm.
And you can, in fact, why don't we start on page, let's see. Why don't we start on page 54, if you don't mind? And I'm looking at the number that's the third from the bottom on each page. Yeah, where it says plan FNP as a percentage of the total pension liability. So what we have on these 3 pages is a 10-year history of how fully funded or not fully funded our pension plan is. And you can see that in 2015, we were 83% funded. In 2016, we were 77. Could we then, Lisa, please go to the preceding page? And again, scroll down. Okay, and you can see it goes 78, 82, 82, 81, and then the preceding page, please.
Mm-hmm.
Thank you. And with the exception of that 1 year where we just did so well in the market, it went up to 93, almost 94%, and then immediately dropped back. We have fluctuated between 77 and 82% over a 10-year period. Whereas if we go and we look at pages, if you could please start on page 58, Lisa. With OPEB, we were starting from 0 basically. And if you look at what's happened over the period, we go from 8% to 9 to 23 to 37, and then to the previous page, please. All the way up to 58. Now, clearly our OPEB fund is not in as good condition overall, but the fact that we have been making consistent additional payments has taken us from 0 to 58%. And I think that it's pretty clear that we need to do the same thing with the pension plan. So I know I've been talking a lot. I'm going to stop. I just say I strongly support this. I'd really like you to bring this to the full commission in January. I'd love to see us move forward with this. This feels like a solid plan. We could debate and calculate for years going forward, but to have something in place that moves us closer to the goal, I think, is what we want to do. Thank you.
Thank you, Andy. I'd like to say that when looking at this schedule, I know it's kind of like moving the goalposts. You're concerned that CalPERS won't spread it out to keep going, ad infinitum, but we want to, but I think you can see that when you look at the original scheduled mid-year payment and proposed scheduled mid-year payment, it goes down a lot, and it does zero out down there at 40 or 41, 41 or 15 years. So we don't owe anything after 2040, 41. So I think it shows that they're not going to move the goalposts on us, and that truly these payments will not only benefit us each year, because as Myrna was saying, by paying those chunks up front, then every year our payment gets less, and then it's paid off in 15 years. So
Yeah. Again, there is a caveat in the report that gains and losses have a great deal to do with the funding status, and the OPEB numbers that Commissioner Elkind walked us through are also a result of impartial. We're making additional payments, but also regarding what the gains and losses are year over year, and that is what we don't know. And but as if you all understand and believe that we're in here for the long run, and in the long run we will see benefit.
Agreed. And I appreciate your caveats, and encourage you, of course, to share that with the full commission. But this feels like a very solid plan, and if you and Erica are comfortable with it, I don't see any reason not to move forward.
I don't either.
I'm going to call it a consensus of the committee.
Yeah.
Certainly those of us here and Deborah, thumbs up?
Thumbs up.
All right.
Yep.
Strong consensus from the committee moving ahead. And thank you so much for this fresh look at things. It's taken a lot of conversation to get here, but I really like this approach. I think we're all feeling really good to get moving on it as quickly as we can. Thank you again so much, Myrna. Let's move to our next topic. Let me ask for public opinion on our next agenda item, which is purging patron fees.
There are no
Any-
more members of the public.
What?
There are no more members of the public.
They
on
left?
Zoom.
Okay,
So just Commissioner Engbarth is observing as the
right,
commissioner.
okay. So I don't have to keep asking. I was trying to remember to ask for public opinion for every agenda. Okay, purging these fees. I'm interested in this presentation from our assistant director.
Thank you for the microphone reminder. Of course, I would need it. No, it's common practice for libraries to determine a time. For us, it's every 3 years that we get rid of unused library cards is what we're talking about with the patron records. Somewhere along the way, and this was probably before we were fine free, any library card that still had a fine or a fee on it was kept, so you couldn't purge them. So currently, there's just under 12,000 library cards, and none of them have been used. Let's see, what was the, well, yeah, like the 1% is that owe more than 500, but these cards are all much beyond the 4th year debt collection mark that the state of California would allow. So while it's this very large number, as you know, I think it's, did I not have it right in the, anyhow, the amount that it's right around $900,000 that, okay, and I don't know why I couldn't see it. Oh, thank you. 971. So that amount, while yes, it's there in the computer, we don't really have a way to go after it or collect it. And these cards that all combined, these 12,000s that totaled that amount, none of those folks have been in more than 5 years. So with that in mind, I don't see how we're going to get the funds back. And we are now fine free. So I think it's going to be rare with the exception of the occasional replacement cost. So what I'm proposing or asking for is being able to delete all of these inactive accounts despite having the dollar amount attached to them, and moving forward, we continue to purge inactive cards every 3 years. But if there is a cost, a fine, or a fee attached to it, then we would just get rid of it every 4 years. Because after 4 years, we can't go after the money anyway. Yes.
Yes, Commissioner.
I strongly support this.
Okay.
I think all of these past due amounts are uncollectible anyway,
Mhm.
but certainly we should purge them as soon as is appropriate. So I think it's a good idea.
Dave, you mean it's a good idea as opposed to pretending that we could,
Exactly.
that we could collect the money that we can't and having it continue to clutter up our financial statements?
It's a receivable that it really is a
That's not
fantasy.
receivable. Okay.
Yeah. Well, it'll also make our patron count more accurate too. So when we're, presenting, we actually know, do we have 53% of our population in the county with library cards? I think we still do, because I don't think the 11,000 is going to totally throw us off, but it would be great to have a more accurate count.
I had a couple of questions.
Sure.
One, I followed the whole thing. It was a very good report. I was stunned though at the amount for 11,000 people, there were, it's almost $1 million.
Mhm.
So
Well,
it just seemed disproportionate for the, 1%, it was 500 or more. I mean, how,
doesn't that come from the days before we stopped late fines?
yes, but,
So we just go-
I'm surprised that we allowed people to continue to check books out when they had
Well,
fines of this.
Well,
Yeah,
and
goodness.
a lot of the costs there, up until 2016, you could actually put library card users or library users into collection
Yeah.
if they had a certain amount. So many of those $50 charges are for going to collections. So
wait.
With
that's
extra
enough.
fees from that, with extra collection fees.
Yeah, so there would be
Okay.
collection fees in there as well,
Okay.
so that's a big chunk. The other thing to consider is even when we had fines, the intent of the fine was really to get the materials back.
Mm.
So a lot of times if you get the materials back in a reasonable amount of time and they're not incredibly late, the kind-hearted librarians would waive the fines. So it's almost like some of that amount is probably fines that would have been waived if the materials had come back.
So the other part of my question was, we don't have this as a receivable on our books, do we?
That is a question I don't know the answer.
I mean, just wonder where
No.
it is.
No, we don't record these in our receivables.
Well, if you look when I was reading through the audit, because I'd already had read the packet, on page 21 of our audit, it says has charges for fines, fees and services, which again shocked me at 175,000 when, as a revenue, when we aren't charging for any fines or anything. I know that there's fees and
So-
services. It seemed like a large amount than I would have expected.
So what is happening there is that we use the chart of accounts that the county, presents to us. It's default language, that it's fines, fees and services. So that includes, when we rent out any community room, they're not fines because we're not fining.
Okay.
But that's just the category that catches, that's where we could, if we were to collect fines, that's where we would record it. So when we do collect books, like any of these lost books or damages, this is where we record them. We also record community rooms that are rented in services. That's where that is being recorded. But we do not record the receipt. We record it when the revenue comes in, but we are not recording this collectible.
Okay, so then back to my comment then, this isn't, 971,000 isn't anywhere on our books.
No.
How can you have off the books? I don't know. Never mind. I don't
Don't
I
ask,
won't
don't
answer
tell.
that question. Yeah.
Mm.
Other questions for Dara about this? I appreciate the clarity of the way you've written this up and, given us all the facts and figures and stuff. And then you're going to write up a policy to bring before the commission in January that'll include your recommendations or
Yeah, I mean, I'll have to update a policy, I think, because right now it would state that we purge inactive patron records every 3 years, but items and I don't know if that's a policy so much as a procedure previously, but
something we should vote on. I don't know one way, either way. But anyway, you'll bring this forward to us
I
in
will
January.
bring this forward to you. I'll
Okay.
check on the format as far as whether it's just an update to policy or if it's
Okay.
actually procedural, something we've been doing for a long time.
Right. Well, thanks for helping us get to this point and cleaning this up. I
Yeah.
appreciate that. That's great. Thank you.
Thanks.
All right, last item, draft finance committee workflow. Myrna, did you have comments about this?
I don't have any comments. We are still on track with these items.
Okay, we have a light agenda next time.
Yes.
We'll come up with something, no doubt. All right, so before we adjourn, so our next meeting is moved to Tuesday because of the holiday in January. So on Tuesday here at 2:00, on January the 20th. I did not ask for agenda items for our next meeting or meetings. Does anyone have anything they'd like to discuss? Okay, well, thank you all for a productive meeting. Thank you very much, Myrna, and I hope to see you in person one of these days. And happy holidays to one and all. Appreciate all of your time and commitment to the finances of the Sonoma County Library. So, thank you.
Great job.
Thank you.
Okay, bye.
Thank you. Happy holidays.
Happy holidays, Myrna.
Thank you.